Please welcome the panel on Money, Access, and Scale, the Evolution of Financial Technology, moderated by Nicole Valentine, FinTech Director of Milken Institute Finance.
Thank you. Thank you. Thank you. Good morning, everyone. We are here to talk about big things. Big economic shifts are happening. The world is moving at a rapid pace with growth, and there's still gaps. There's still gaps in the market. There's still gaps in wealth. And FinTech has been a part of a lot of the solutions that have come to the table around connectivity, around access, about bringing people online into the economic ecosystem. But there are still 4 billion people who are underserved financially in this world. There are still 1.3 billion people who are unbanked. There's still 2 billion people who do not have access to the internet. And there's still 4 billion people who do not have a verifiable physical address. So FinTech has done a lot, but FinTech, there's still more for it to do. And so these innovators, investors, visionaries on this panel are going to talk about the opportunities, what's next, and what more FinTech can do to close the gap of wealth, to bring more people into the economic system, to create more entrepreneurship, jobs, and home ownership. So I'm looking forward to this conversation, and I want to kick it off with your stories of money. How have your FinTechs been moving money and flow around the world and reaching people in real ways and businesses in real ways? I want to start with Matt Oppenheimer from Remitly, because remittances is just a global way of moving flow. I'd love you to tell the Remitly story.
Yeah,
Thank you for joining us.
Yes, amazing. Thanks for having me. I'm Matt Oppenheimer. I'm CEO of a company called Remitly that I started about 14 years ago. And I started it with the premise of, as you were saying, the importance of remittances. I saw that $2 trillion was sent internationally every year. I personally was living in Nairobi, Kenya, where I was running mobile and internet banking for Barclays Bank Kenya. And I saw how hard it was to send money internationally myself. But I saw how much more important it was for a lot of my Kenyan friends who had a lot of their income coming from their parents, from their sisters, from folks that were living abroad. And so thought that there was a better way than the traditional physical cash-based way of sending remittances. Moved back about 14 years ago, and we've thankfully been able to have a lot of success. We sent about over $50 billion in 2014. We have 7.8 million quarterly active users. We went public in September of 2021. And the amazing thing is, while those numbers are large, if you compare it to the $2 trillion that's sent every year, we're just scratching the surface. But thankfully, we've helped bring down the cost. When we started the business, the average cost, according to the World Bank, was 15+%. You can see all our numbers are public. We've been in the 2 to 2.5% range. And the industry has come down to about 7% if you look at the World Bank numbers. So having a real impact on people who really need remittances as a lifeline. And in a lot of countries, remittances are 10, 20, 25% of GDP. So it's an incredibly important part of just helping those that need finances the most, and we're real privileged to be able to do that. So that's the Remitly journey, and excited about learning from all of you and just the discussion overall.
Thank you. Ambassador Trevor Traina. I can call you Ambassador, right?
You can call me anything you want.
You have been focused on identity, and you've been focused on world issues around how do we bring more people into the value of money, the value of bringing worth to the transaction, to the process. I'd love for you to talk about the value that you're looking at, and also the problem set that you're addressing with your big ideas.
Well, first of all, I'm delighted to be here, and it's a rapidly changing world right now. You have artificial intelligence, you have DeFi, blockchain, all these new technologies are starting to come into play, and so it's going to be a fascinating few years as we see the impact of all these. And between the various things I've done, I've been at the juncture of many of these technologies. I've obviously served our country overseas as an ambassador, so I've sort of picked up some of these trends. And then with blockchain, many things are possible, including remittance, et cetera, at vast scale. But with the rise of AI come not only opportunities but problems. So identity is a problem. Fraud is a problem. These algorithms, AI algorithms, are so smart they can actually fake KYC. They can create your driver's license from your image, your address, etc., and use it to open an account or plunder an account or many other things. And so one of the things that I've been most focused on now is a company called Tools for Humanity, where I'm working with Sam Altman on a global identity system that is strong enough to withstand the era of AI. And it is called Proof of Personhood, which might, in my opinion, become a basic human right, when soon we won't know what is real and what is bot or AI generated. And for things like financial transactions, or for the unbanked or people who don't even have an identity, which is a shocking number of people, these new technologies, I think, present tremendous promise.
Awesome. Jalak Prucha, you have been investing across the space. You've seen the advancements of technology. You were early in digital assets and looking at the transformation of money and the internet. Can you talk about, from your vantage point, how you've been picking winners and what regions you've been focusing on in your investment strategies?
Well, thanks, Nicole. It's great to be here. Again, I always enjoy the conversations. So I launched Future Perfect Ventures in 2014, been a VC since '99, and was a tech investment banker in the mid-'90s when Netscape IPO'd. And so have seen the transformation of technology. I was at Intel Capital. So about 15 years ago, I started thinking about every kind of the data that we have available now through mobile technology, through the connectivity, and what's the next stage. And what I concluded was there was something that was next, as you said. So mobile banking brought the unbanked population to under 2 billion. And we've seen a lot of growth in the emerging markets there. And the GDP growth that's been linked to that has been phenomenal. But there's still barriers for people to get access to banking, build their assets. And when I went to my first Bitcoin conference in 2013, I just became fascinated in this self-sovereign asset. Transfer of value, but also a means of saving for people who used to stash cash underneath their beds, who couldn't invest that, had no means to do that. So we've been investing since 2014 in digital assets and all the infrastructure that is creating a more seamless financial system around the world. Instead of silos, we used to have PCs that were siloed and people can connect. The internet allowed connectivity between those PCs, and now finally we're building an infrastructure where assets will be seamlessly connected, and people will be able to get loans, monetize their skill set in ways that they weren't able to before.
Great. And speaking about connectivity, I mean, Moove is connecting the dots across the continent of Africa and beyond. I'd love for you, Ladi, Delano, to talk about what you've accomplished with Moove and what more you want to do with it.
Wow. Thank you very much. That's a loaded question, and obviously I'm delighted to be here. Moove was really founded by myself and my co-founder, and we were obsessed with a problem that I don't think a lot of people talk about, which is youth unemployment. I struggle to understand how, when you look at the continent of Africa, 70% of our population across the continent are below the age of 35, yet as a continent we struggle to create jobs for all of the young individuals that currently reside on the continent. And the way we started to think about things is, what stops the ability for people to work? And what we realized with the advent of ride-hailing, specifically in Africa, is that those who actually wanted to work couldn't access the financing that they required to just buy a car and operate a car on a ride-hailing platform. And when you start to think about how lucrative, how large ride-hailing has become across the continent, its ability to generate jobs is massive, as long as somebody can remove that barrier. And what our innovation was revenue-based vehicle financing, whereby we figured out that if you can get an API integration into the databases of the ride-hailing platforms, you can start to build ML models and credit scores based on the performance rather than more traditional credit scoring systems. And what this eventually did is it enabled thousands now, of young Africans to get into a car, start driving, and ultimately start their journey of upward mobility by virtue of earning a living. Now, the business started in Nigeria with 76 cars about 6 years ago. We're now just under 40,000 cars. We're the largest rideshare fleet in the world. The business has scaled now to 20 cities around the world. And we recently have gone into Latin America by buying the second largest car rental business in Brazil. So it's a problem we identified in Lagos, Nigeria, but it's one that we've learned is something that can actually be exported across many countries around the world.
That's amazing. Thank you, Ladi. Ashley, I want to turn to you, Ashley Bell. We're talking about what's happening around the globe, and I want to kind of focus us on what's happening in the United States. There's been a lot of economic mobility here in the United States, but there's also some issues. Not everybody's achieving or reaching that American dream with the ability to get access to capital and credit. I'd love for you to talk about what you're doing in your space.
Well, thank you. You know, there's a lot of opportunity, there's a lot of possibility. And I think the benchmark for me was when we looked at what happened with COVID. And at the time, I was working at the White House as policy advisor for entrepreneurship and innovation that helped really propel what became the Payroll Protection Program, which was sort of the bailout for small businesses in the United States. And what that did is it highlighted many of the challenges that COVID presented. You saw underserved communities drastically affected in healthcare and education, but specifically finances. You know, we chose to deploy a vast percent of our GDP through banks. That was our choice. We said the banks could deploy the money and get people what they needed. And for a lot of people, that was true. For a lot of other people, if you didn't have access to a bank, if you didn't know somebody who worked at a bank, those early stages were scary. We almost lost a generation of women and minority-owned businesses purely because our system had massive flaws to deploy the capital. And so in that moment, myself and what became my co-founder in my two companies, Redemption and Ready Life, was Dr. Bernice King, who, as you know, is the youngest daughter of Martin Luther King Jr. And she saw what was happening in the market, was very reminiscent of the echoes of some of the sentiments that her father had. When you look at the night he was assassinated in Memphis, it was over 145 African-American owned banks in our country. And at the height of COVID, there were 16. That is a massive decline. So out of that work, we decided that, one, we needed to create access points along the spectrum of banking. For those that don't have a credit score or had poor credit, we created Ready Finance, which does hard money lending to people to own a home without a credit score, purely based on their rent history. But then we also know that you need to bring those people into the traditional system. You just can't start there. They have to ride the arc. And so happy to announce that as of Friday, we just chartered Redemption Bank, which would be the first African-American owned bank in the Rockies, the first bank created for the sole purpose of impact. Founders are big finances, big foundations, and a lot of billion-dollar corporations that believe there needs to be a black-owned space on Wall Street where that money can aggregate and what can be deployed. And so I ask you, when we have these conversations, many of us that have these aspirations to be impactful, we also need to be cautious of where we sit our money. Our money has to sit somewhere. And if it's sitting somewhere at a bank that may not match your values, many of us have multiple banks. Think about what that impact could do for that cash that's running these billion-dollar corporations, sitting some of that in an impact-driven location, whether it's a woman or minority-owned financial institution, because those were the only banks that were funding women and minority-owned banks during PPP when nobody else would go to them. It was small fintechs and small banks that saved the economy of the United States and thus bolstered the world.
Thank you. Congratulations, amazing.
Thank you.
I know it's not easy to own a bank, buy a bank, get to the place, so that's amazing. I'd love for maybe each of you to talk about the impact that you focus on, because there's the idea, there's the vision, and then there's how does it reach the person in their wallet, in their account, on their ledger. How do you get these great ideas into the hands of more people? Can you talk about maybe Ambassador Traina, talk about kind of what are the practical ways that this idea around making sure people have identity, what are the practical ways that generates the impact you're looking to create?
Sure. So I'm working with Sam Altman and Alex Blania on their company World, formerly called WorldCoin, and it is truly a global project, and it is absolutely fascinating. So you can imagine sort of from the brain that is ushering in the era of AI, the brain of Sam Altman, came the realization that in that era we would need new and better and stronger tools, and everyone would need them, right? So he came up with a concept called proof of personhood, which actually allows individual humans to prove that they are unique human beings, and it issues them on their mobile device almost like a digital passport called World ID that they can use to check in and prove that they're human. And that ID system is fueling a global network free of fraud where every participant is a verified human being and there are no bots or algorithms. And this project is active now in most of Latin America. It's operated in Kenya, parts of Europe, a lot of Asia, and every human on the planet is eligible. And every human who joins is given, in effect, a little piece of participation through cryptocurrency called World. And they receive it periodically on their phone, and it gives them economic interest and also a vote in the protocol. And so this is such a novel concept for a couple of reasons. First is open to everyone, doesn't matter who they are. Second, for many of these people, this might be their first form of identification. Third, there's real economic value in what they're getting, like in some cases, hundreds of dollars that could pay for food, medicine for their kids. We even have a story, I believe is in Kenya, someone who used the money to buy a goat so that they could have a business. You can see, if you want to fast forward, right now I believe there's about 26 million people have this app, and about 12 million of them have actually gone and been human verified. But by the end of this year, I think it could easily be over 100 million, and the system is built to scale to billions of people. The technology is strong enough, and so that could have substantial impact.
That's great. I mean, think about this concept of the ancient modern, like all of it's happening on one planet. There's so much that can be kind of scaled up to get to the point where people can actually be identified and have personhood. Thank you for your work. Ladi, I want to turn to you because you talked about youth unemployment. Yep. And the head of the World Bank was talking yesterday about the fact that there'll be 1.2 billion young people in emerging markets who are coming online for jobs, and they predicted that there will only be 400 million jobs to meet that. And so there's a huge gap. And so what you're doing, I mean, I'm sure there's so much runway for opportunities and growth and scale. But how do you take on that issue? How do you look at that in the context of what you're building now?
Yeah, it's a daunting prospect. I think without going too far down this topic of conversation, but if one doesn't solve the youth unemployment issue specifically on the continent of Africa, then it is a ticking time bomb. As my mother always taught me when I was younger, idle hands is a devil's workshop. And we're already starting to see that in certain parts of the continent when you think about the insecurity challenges that we face. So being able to create an employment opportunity specifically for those on the continent, I think is paramount. It's the single most important thing I think all young Africans should be focused on. When we think about Moove and the impact that we're having in our business, there's one specific story that till today still kind of gets me to tear up, but more importantly, I think it's a good example of the impact that we have in the lives of our customers. And it's said in South Africa when during the COVID pandemic, and an individual who later became a Moove customer, he was recounting his experience of how Moove came into his life and the impact that Moove had. And it was during the COVID pandemic, and he was at home, he had lost his job, and he was recounting to us how he'd even lost good standing with his wife, that his wife and his children no longer looked at him with the dignity that he felt he needed because he wasn't bringing any money, food, or anything to the house. And his brother, not too sure if it was actually his brother or not, but his brother reached out to him and said, listen, a group of us are going to a certain neighborhood to go and commit a crime. And we were going there to commit this crime in order for you to have money for your family. And literally 3 days before his brother had reached out, he had signed up for Moove online. And the evening that he was set to go out with his brother, he got the text message from Moove to say he had been approved. So the following day, he obviously went to go and pick up his car, and he started earning, and the rest is history. Now that impact and the fact that we had the opportunity to intervene, that's a timely example, but the fact that we had the opportunity to intervene at the right time, and by chance in this instance, gave him an opportunity to turn his life around and start earning money. Now, as we start to think about where the world is going and all the amazing innovations that are taking place, we've said to ourselves, how does autonomous vehicles specifically have an impact in rideshare and ride-hailing? And what impact would that have when you think about our customers who actually need a job in order to earn a living? And what we've come to learn is that when you think about autonomous vehicles specifically, somebody needs to own the car and operate the cars. So where we're transitioning to as a business, and we've recently done a deal, a global partnership with Waymo, which gives us the opportunity to launch here in the US. But the way that we're thinking about things now is how do we empower individuals to own fleets of autonomous vehicles? So rather than driving one car 9 to 5, you're now managing a fleet of autonomous vehicles within your locality, generating revenue, hopefully 24 hours. So you're empowering individuals to move from drivers to fleet owners and ultimately business owners. And that's the way that we think, hopefully, our business over time can evolve and continue to solve the youth unemployment problem that we face.
That's amazing. Thank you for that. Matt, I want to talk to you about some of the populations that you serve with Remitly. I've heard your origin story a couple times. You talked about what you did in the Philippines as one of your early use cases, and also about what you do with seafarers.
Mm-hmm.
Can you talk about some of those stories, those personal stories of your work?
Yeah, absolutely. I think what has enabled us to be successful is having a bold vision, which is transform lives with trusted financial services that transcend borders. But as you were mentioning, we started just with the U.S. to the Philippines, just with one specific segment of customers that we could fundamentally build trust with. And I talked about the economic impact that remittances have. But when we think about financial technology broadly, especially financial technology that's impacting consumers, what I overlooked 14 years ago when I started the business was everything comes down to trust. And because of the identity challenges that are out there, and they vary by country, they vary by geography, et cetera, it took me some time to take a step back and say, okay, we're asking customers for their name, their address, their, in the U.S. context, tax ID or SSN, date of birth, and then we're asking us, we're not lending money, we're asking them to give us a big percentage of their hard-earned money, big percentage. We're asking them to trust us to deliver it hundreds or thousands of miles away back home. And what I underestimated is even if you offer a lower cost, in fact, if you offer too low of a cost, it can erode trust, because customers would say in the early days, I don't know, this seems too good to be true. Like, who are you? And so what's fascinating is everything in our business. I mentioned our vision. The word trust is in there, but it all comes down to trust. And trust is paramount, because the other thing I didn't appreciate as much was how complex it is to send money back home. Like how complex it is to build a global network of collecting funds, all of the FX, treasury, cash management, compliance, fraud prevention, identity verification. And then we send money to 5 billion bank accounts and mobile wallets and 400,000 cash pickup locations. That's really hard to do. And the problem is customers have tried to send money back home and they've had those funds delayed. And so some of the stories are examples where, I get escalations still. 90+% of our transactions are delivered in less than an hour, 24 hours a day, 7 days a week, but that still means 10% is not. And I've gotten notes from customers directly that said, hey, listen, I'm sending money back to my uncle who's having surgery and is in the hospital, and I can't afford to have these funds delayed. I'm sending money back for tuition. There are customers that send money for a wide range of critical non-discretionary reasons. But because the global infrastructure of money movement hasn't been redone yet, and is really hard, and then once that is done, because the trust hasn't been built with customers, there's a lot of friction and challenges in the system. So that's what we're setting out to reinvent and redo. And I think there's a big opportunity. But it took me. Your question initially was about impact, and I used to think it was just about price, and that's the easiest to measure. I mentioned the 10+% down to 2.5%. But the thing that is actually the most important is how many customers have we actually been able to build trust with? And I can talk about how we've been able to do that. But that's when it comes to consumer FinTech. It's one of the reasons it's been hard, I think, for companies to disrupt this space. All comes down to trust.
Ashley, So you have a bank, day one. We're talking about banking. We're talking about layering in innovative technology and FinTech. Can you talk about your vision, right? You set out to have this bank.
Right.
You have a great partner in Dr. Bernice King. You have great people on the board. You have great investors. What are you going to do with it? How are you going to make an impact?
You know, I think his word trust is so critical. When you look at the history of banking in our country, trust has been the number one, barrier. When you look even at the origins of how we came to the concept of emancipation in our country, we had a bank that was created by the federal government of the United States called the Freedmen's Bureau. The Freedmen's Bureau was created in 1874, supposedly for free men. And that bank ultimately lasted 5 years, was closed down by Frederick Douglass, the great abolitionist, because he realized that the bank was a Ponzi scheme. The great educator, W. Du Bois, gave a very prolific quote, a prophetic quote. He said it would have been better. It would have been better if African Americans had remained slaves in the United States another decade to suffer the psychological repercussions of having a bank take all their money created by the federal government with no recourse. That has reverberated through generations. This is what leads to cash being under the bed. This is what leads to so many women and minority-owned businesses being cash-based only because they don't believe that a bank will loan them money unless they can prove they don't need it. And now we live in a world where banks want to be fintechs and fintechs want to be banks. And so the regulatory posture is that they're leaning towards banks providing more of the financial services. It was important that our lead investor was Ally Bank. Ally Bank was a great ally for us, excuse the pun, because they started off with $14 billion, grew to $140 billion with no branches. They just grew organically, and they serve a lot of the same customer base. So for us to be based in Salt Lake City, think about that. We're an African-American-owned bank in a very non-African-American area. Probably the least African-American area you can find in the United States, on purpose. Because every other MDI in the United States that is struggling is in an LMI, a low to moderate income area. We turn the economics on its head. Take an African-American controlled bank, put it in the richest place possible, zip code possible in Holiday, Utah, surrounded by wealth, surrounded by other companies that have invested in this bank to give us a floor of great deposits, great business, but allow us to project that wealth across the United States digitally. So we will be the first African-American-owned bank that will be fully digital, allow people to bank with us wherever they are, and our goal is small business customers. We want to serve small businesses. We want to take a risk on those people that are taking risk on the hardest places possible. But also, we understand that there needs to be more people brought into the banking system, and it starts with trust.
Great. Jalak, I want to turn to you because you've been investing across the space. You have great insights. You've invested across lots of cycles, volatility. You've invested through crypto winters. I want to get a sense for you, how do you, in your work as an investor, pick companies that can make an impact, and how does that impact then translate to profits and to purpose?
Yeah, I mean, there's so much to unpack with all these comments and great work people are doing. When I started the fund, I was impact and profits first, and I believe those two are very closely tied. And if you look at the impact that all these companies are having, they're also providing economic opportunity to their investors, untapped economic potential, as well as then creating overall potential for everyone who lives, say, in the United States. I mean, prosperous, everyone being prosperous helps the entire country. Not leaving anyone behind helps the entire country. So I think there's great, from a pure monetary investor perspective, there is so much money to be made in these underserved populations, and then removing all these intermediary layers that are really built from the 20th century when we needed that. We needed to, as globalization took hold, we needed to know how to trust the counterparty, and then we built all these layers. And now, for a while, technology is able to peel back those layers. Now institutions have a lot to lose, but they're starting to learn that they have a lot to gain by accessing new markets, and crypto and digital assets is an example. I mean, when I got into the space, I mean, the banks against it, almost every country and the world has tried to outlaw Bitcoin. It has not worked because people want that economic opportunity. I believe most people are going to pay very little for themselves. They just don't have the access and the tools to do that. And I think it's stablecoins. People say that there's no use case that stablecoins, can only earn in their local currency that is then depreciated, and we've seen it also in the U.S., well, they can finally access other assets, and whether it's U.S. Treasuries or euro-denominated assets, they can sit there in a village in India and access that and hold it, through this infrastructure that's being built around digital identity. The other is just quicker transactions happening. We no longer have to go through the FX transaction fees, the delays in time, so it's more real-time transaction processing. And then e-commerce, right? PayPal has built infrastructure, but they also now have their own stable coin because they see the opportunity there. Visa and MasterCard are also trying to figure out how do we access this opportunity. So to me, this is worldwide. It's Remitly did a lot for countries like Africa that had up to 20% fees to transfer assets, and now stable coins can do a lot more combined with some of the infrastructure the fintechs laid.
That's great. I'd love for maybe each of you to talk about the technology layers that you're focused on, because when we talk about Web3, and if we all read Chris Dixon's Read, Write, Own, like what the future looks like, what does this Web3 world look like, and the connectivity and all of the technology layers and the nodes talking to each other and decentralized moments that we're having. Can you all give us a sense of where you see yourself in a Web3 world that we hear is coming, we know is the rails are being created to make sure that digitized finance is a real factor in our economies? Maybe Trevor, you can talk about some of that Web3.
Sure. So I sort of see two large trends associated with blockchain and crypto. The first is the technologies, and the second is the adoption. So on the technology side, the blockchain is a really marvelous invention. I mean, it's really this immutable thing which shows that any transaction or really any event is known to everyone, can't be denied, can't be ignored, and that's a fundamentally profound invention in a way. And the way it's been used with tokens and coins and things has principally been adopted by younger people. And to some of the points made earlier, I think young people who want opportunity, they don't see it coming from the avenues their parents enjoyed. That story of, my grandparents bought their house for $40,000 and today it's worth $900, or my parents bought Apple computer stock for $1 a share. Young people do not believe that will happen to them. And so if they want to make their mark or have their opportunity, it's going to come from things like crypto. That's where they think it's even possible. And then what crypto has done is it's unlocked all kinds of value that wasn't previously available. So like tokenizing things, there's even real world assets like a piece of real estate or a piece of art or whatever. It can be split into many little pieces and held by a token. Franklin Templeton Funds offers a mutual fund in this thing called Benji. It's actually a token that connects to their fund, and when you own these Benjis, you can then earn interest on them and leverage them in ways you couldn't with a mutual fund that's sitting in some account you get a paper statement for once a month, or your retirement funds, your 401k. Those are things that are just sort of conceptual that someday you'll see when you're old enough, right? But with these new technologies, they can actually be owned and held in tokens in a wallet on the blockchain, and you can earn on them or borrow against them. And so younger people who are currently owning crypto wallets and crypto assets, they're going to expect that these legacy financial products are going to be flexible in the way that they're enjoying their crypto assets being flexible. So big institutions are going to have to wake up really quickly and figure out how they offer that flexibility to this new generation of consumers, or they're going to miss the mark.
Great. Jalak, I want to get back to you on the unlock for blockchain and institutional adoption, retail adoption. Can you talk about what you're seeing in the space and the growth of that?
Yeah, I mean, think about a year and a half ago, the SEC approved ETF, Bitcoin ETFs, and that was huge. That kind of put a stamp of approval that this isn't some Ponzi scheme. This is a real investable asset, and also a safe way to access for the average person. And but there are only so many people who have access to ETFs, and that's going to start to change too in terms of access to Bitcoin. But right now, before the ETFs, you had to go open a wallet on Coinbase, and then you have a bank account or a credit card, and you had to make sure that you were on a secure platform. There was a lot of crypto that was stolen. So through ETFs, really unlocked a bigger market for Bitcoin, and then now we've seen Ethereum ETFs. We're going to see Solana ones. So every crypto, major crypto will have an ETF, and then we're going to start to see ETFs that are more of an index for a certain industry, so like AI or real estate, and so that's where that access to investable assets is going to grow, and I believe that we're going to not only, once we have ownership of these assets, then we're going to be able to have access to credit and collateralize. So if you hold some Bitcoin, you can borrow against that Bitcoin almost instantaneously. Right now, if I were to go and try to get a HELOC, there's a long process to do that. It's gotten better, but a long process. Right now, I can borrow against my Bitcoin within hours, or even less than an hour, depending on the platform. And right now, some of those interest rates are higher, but as you have more competition, that you're really going to see risk and reward start to correlate a lot more. So being able to fractionalize assets like art, I can hold a piece of art. I can own an investment in the coffee shop down the street that I believe in that owner. So they're able to raise money, but then I can potentially also borrow against that asset, and all the financial information associated with that coffee shop becomes available. So that's the grand vision I see, where everybody is able to monetize, against, assets they believe in, and from a longer-term investment perspective, but also to access credit.
Thank you. Ladi, I want to turn to you because emerging markets, Africa, Latin America, they're taking hold, stable coins taking hold. A lot of these advanced technologies are accessed and utilized because of hedge against, inflation, or hedge against devalued currencies. I'd love to get a sense from you as you're building out Moove and you're growing, you're expanding. What are you seeing in terms of opportunities to tap into the demographic that really is savvy, right? There's a lot of financial education that comes when you're trying to deal with a barrier. You find a solution, and then you have that acumen. You know how to use these stable coins. You know what crypto is. You're out there. You're negotiating in the market. Love to get a sense of how you want to continue to kind of, with your applications, with your growth, tap into just a demographic that's increasingly modernized.
Sure. I think when you start to think about the markets that we operate, although we do operate now in a few developed markets, but when you think about the emerging markets, vehicles in and of themselves aren't necessarily assembled in all of the markets that we operate. So there's a huge piece of importation of vehicles and thus importation of spare parts. Now, when you think about how currencies are performing in a lot of those emerging markets, to the point that you raised earlier on, they appreciate, but in more instances, there's a depreciation curve. When we started the business in Nigeria, the Naira was at 360, the Naira is at 1600 today, and that was 5 years ago. So then you have to start thinking about, okay, what is the impact of said depreciation, A, on the cost of your vehicles, which are the vehicles that you are ultimately financing for our customers, and B, what impact does that have on their ability to earn a living when the currency moves? And really, there's no real way to protect yourself against said FX fluctuations, apart from when you now start to think about tokenization of our ecosystem. So when you think about our ecosystem, you've got individuals every day, all of you guys are getting in cars and you're paying for your Ubers, you're paying for your Grabs and your Bolts. And all of that revenue then comes into the Moove ecosystem, whereby the drivers earn a living from there, they pay back their vehicles from there, they pay for their insurance from there, they pay for their maintenance, servicing, and repairs from that same closed financial system. And the sorts of things that we are thinking about now is how do we tokenize that in terms of a digitized real-world asset, and how do we ensure that it's one single stable currency that operates throughout the Moove ecosystem, regardless of the country you're in, thus eliminating the risk that macroeconomic challenges can bring in the everyday earning potential of our customers. And for us, that's just super exciting. And that's how we see the actual implementation and adoption of Bitcoin, of other cryptos, of other stable coins, the tokenization process actually in the real world, in the day-to-day lives of our customers.
Great, awesome. Matt, I want to turn to you because I think that in your space, you've been in the space, you have lots of data, you have lots of information, you have lots of just rich information about what users are doing across the world with their money. And like you said, your stories that you talk about, how do you think that data plays out to some of the future products and services that you're thinking of, some of the innovation that you're thinking through? Just curious how you're looking at that.
Yeah, I think, so we operate in 170 countries, and I think that it's been interesting to see some of the data evolve in terms of just digitization of financial services. So we talk, before we jump to blockchain, to Bitcoin, to stablecoins, et cetera, if you look back 10 years, most of the money picked up in the Philippines, a very large remittance market, was picked up via cash. One of the things we've helped drive is digitization via mobile wallets like Gcash. Obviously coming from where I lived in Kenya and seeing how M-Pesa transformed the domestic financial economy, that's happened in the Philippines. But the world's a big place, obviously. And I think sometimes it's really important to break it out because it's very different in depending on the country we're talking about. So the Dominican Republic is an example. The predominant way to pick up funds in the Dominican Republic, it's unique in that it's still door-to-door delivery. Someone comes and delivers physical cash to your door because it's convenient and it's trusted. There are some countries that are still, predominantly cash pickup. There are some that are mobile wallet. There are some that are predominantly bank deposit. So it really varies depending on the country. That being said, at a global level, what is happening is that there is much more of a digitization. We've talked about that and shared some of that data over time, which is great. But again, it takes that trust for folks to be able to say, I'm not going to hold that cash, on physical cash. I'm going to actually trust this financial services institution with that. And it's been interesting to see how that's varied depending on the country. One of the things that I'm reflecting on when we think about Web3, when we think about technology, there's two things. One, it always has to come back to what is the problem that the technology solves? What is the consumer problem? So for us, something like stablecoin could be a business problem for us, like how do we improve our treasury, cash management, et cetera. Or it could be a consumer problem. I completely agree with your point around deflationary currencies and how there's the demand for customers to want to hold a more stable, less inflationary currency. So that's one. What is the problem it solves? And I do think within the crypto space, there are clear pain points when it comes to global payments, when it comes to remittances, when it comes to financial services that transcend borders. That I see there being problems that it can solve. Where prior with Bitcoin, things like that, I was more of a skeptic in that area, as opposed to areas like having it be a store of value. The second thing, though, within financial services, and why there hasn't been as much innovation, is regulation. Regulation is an important part of the trust ecosystem. And I think having clarity when it comes to Web3, when it comes to crypto, of what the regulatory environment is incredibly important. But that varies by country. And so I think innovation will happen at different rates in different countries, depending on the clarity of that, the regulatory environment. I think that it'll be really interesting with stablecoins in emerging markets. Again, it'll probably be a wide range in terms of how regulators react. But as stablecoins start to get more adoption, you've got local banks, you've got other interests that want those funds to not shift to a global store of value that is potentially in a stablecoin. How that all evolves, I think, will be a really interesting space to watch. So what's the customer problem that's trying to be solved is obvious within any sort of technology, but starting there, I think, sometimes is missed. And the second is, how will the regulatory environment evolve with a lot of this evolving technology? Because that within FinTech is something that's very different than other parts of the economy where there's innovation.
I'm glad you brought up regulations. I want to turn to you, Ashley. You have this bank, highly regulated bank.
Highly regulated.
But there's a new administration that has a different approach to crypto, to digital assets, is opening up doors for banks to bank with crypto. So I'd be curious what your take is. You're coming in the fold at a very interesting time, right? At a change in administrations, a change in idea.
Yeah, I think it's an amazing time because the trust issue that I just talked about, this is one of the things that actually benefits. There's so many marginalized communities that don't trust the existing system that crypto is a positive. It's something that they know is not the system that they can't trust, so they might as well trust something new. Highest percentage of crypto users by race in this country is African Americans, which is wild when you think about it, but they love to lean into it because they can trust it more. So when we saw the outlook and we see with the new administration a more positive outlook on the use of being able to move currency between fiat and non-fiat at a regulated space, redemption to play in that game, you're either going to see the big banks are going to be able to do it. The question is, will the community banks, will the smaller banks be able to play in that space from a regulatory posture? And how will the regulators treat us as those banks under 10 billion versus those over 100 billion? And we think in that space, we have to be able to show the most sound books possible to be allowed to play there. So for us, the question is, how do we balance out our portfolios so that the banks see us as stable enough to play in that game? Which is why we partner with the industries that make the most money off of black and brown bodies and talent, which is sports. So on our board, we'll be the only small bank in the country that can say that we have the CFO of Major League Soccer on our board. Soccer's played in every ghetto and every suburb in the world, and it's growing in the United States. We also have the CIO of the National Football League who's approved to be on our board. Being able to have that connectivity and to be able to direct line to financing big sports in America gives us a stability that no other small bank in America will be able to have. So as these conversations happen about who will be trusted to be able to step into this space where consumers will be able to easily move between fiat and non-fiat, we believe we'll be positioned strongly with the new administration and going forward because of the stability of our balance sheet.
Great, amazing. I'd love to talk about, because you all are in the space, you all are working every day. This looks all great, but when we leave here, you all are rolling up your sleeves, you're working hard, and you are coming across barriers, things that are hurdles to you getting to where you're looking to go. I want each of you to reflect on the last 10 minutes, a barrier that is in front of you that you just want to be wiped out so you can move forward and have a flow of money, access, and scale in your work. I'm happy for anyone to jump in. Trevor?
Sure. So going back to world, there's sort of two issues that we've been dealing with. The first is that we do give people a cryptocurrency. And even though that's readily available to every human on the planet, there are, in many countries where we operate, issues with crypto. So that's the first one. And paradoxically, in some of the countries where the people are the poorest and would benefit the most from getting it, is where we have the biggest issues. The second is identity, right? So the way the system works is we use a very sophisticated camera engineered in Germany that takes a photograph of your eyes and takes key iris points and turns it into an anonymous numeric code, which is then protected by this very sophisticated MPC database, et cetera. It collects no information about who you are, where you live, whatever. In fact, you give away more biometric information walking through a subway or getting on an elevator in a modern office building. But how do you tell people that we've just taken a picture of your eyes, but we're not going to store anything, we don't know anything about you? You know, it's a communication issue and a regulatory issue because regulators don't understand these things. So everything new comes with complexity.
Thank you. Matt, some barriers that you see that you just want wiped away. I give you a magic wand and you wipe them away.
Yeah, I think that at the end of the day, I mean, we think in very unit economic terms. So what's the customer acquisition cost versus what's the lifetime value? And we've spent a lot on marketing to build that top of funnel customer trust. And we have, as I mentioned, in Q4, 7.8 million quarterly active users that use our platform. It is more reliable, more affordable. It is better for customers to use. There are 250 million folks that live and work outside the country they're born. And so I think that on the exciting side, we have this flywheel that's kind of spinning. Word of mouth is a big driver, but ultimately, in order to transform the entire industry, the biggest barrier is building that top of funnel trust in a way that is scalable across the globe. So that's what we're focused on.
Ashley.
I think it's credit scores. I think we have a monopoly on 3 non-government organizations that pretty much determine who gets access to credit. Credit is like water in these communities. Where credit flows, opportunity grows. When you do not see access to credit, it does not. And as long as you have a system where these 3 digits are a shadow that chases around millions and millions of people around the world, and especially in our country, that shadow that they don't want. And then when you look at the data tells us that the traditional big 3 credit bureaus, 54% of people of color on those credit scoring systems, their credit score is too low to own a home in America. So it's impossible for me to believe that 54% of African Americans should not be trusted to own the place that they live. I believe that on its face, we have to denounce that system, find something better. And so if that can be removed and banks can use technology, financial technology, many of the same systems, variants of the people up here, that is actually giving you better data, taking better markers, and let us use that data to determine whether or not we should extend credit to our customers, that would unlock so much potential and create so many trillions of dollars of economic activity in our country.
Great. Ladi, what barriers are you facing and how are you overcoming them?
Sure. I think the barrier I'd like to speak of is not necessarily relevant to us in terms of a barrier that's restricting our ability to grow, but it's a barrier that I believe we have proven, if overcome, solves real problems. And that's access to capital for founders who necessarily may not be from constituencies or groups that can generally access capital. And I'll explain what I mean. When you think about Africa, Africa in and of itself is a myriad of institutional voids, loads of different problems that can't get solved, which is why, to a degree, the continent doesn't work well. But when you have entrepreneurs and founders in that ecosystem trying to solve those problems, those are real solutions to real problems. And what Moove has proven is that a good idea can come from anywhere. An idea that solved a problem in Lagos, Nigeria is one now that's operated in 20 cities ranging from Japan all the way to Brazil. And with that being the case, if we didn't have access to the capital that we got access to, and we're supported and backed by amazing investors from Mubadala, BlackRock, the World Bank, and so on and so forth. But if we didn't get access to that capital, then the problem that we managed to actually solve and the solution that we offer wouldn't have been able to be accessible by so many people around the world. So I would argue that the challenge and the constraint that holds a lot of really smart founders back is the democratization of access to capital to fund these visions and fund those ideas. And I would advocate and challenge all the investors that are here to start thinking further afield than just at home, and start thinking further afield than what you know. Because ultimately, innovation isn't generally next door. It generally comes from somewhere where you least expect it.
That's great. Thank you. Jalak.
Yeah, and just to add to that, one of the reasons I started Future Perfect Ventures is I was born in Kenya, I'm Indian. I spent a lot of time in emerging markets, but I spent a lot of time in Silicon Valley too, and I didn't think there were enough investors out there, especially at the earliest stages, that understood that actually some of the places that are the most underserved provide the biggest opportunity and growth. And so 100% agree, access to capital, access to credit needs to continue to grow. What I'm going to talk about, though, in terms of barrier is fraud. As we've seen technology and digitization grow, we've also seen fraud and cybersecurity become a huge issue. And that's what really, if we look at the crypto industry, FTX really set the industry back several years. That wasn't necessarily related to crypto. It was more related to, I'd say, a lack of regulation, a lack of clarity, and how bad actors could kind of game the system. And one of the areas we invest heavily in these days is fraud prevention, especially as more assets move to real-time on-chain. We need to start to catch these fraudulent transactions while they're happening, not after the fact, because it's very difficult to recover those assets after the fact. So if I could just snap my fingers, I'd get rid of those bad actors. But when we're talking about finance and the opportunity that these assets kind of create, you're going to have bad actors, and we just have to stay one step ahead so everyone who is a good actor can continue to access capital and flourish.
And with my last question, I just want to highlight there are over 1,000 speakers here at the Milken Institute, over 200 sessions. And when you hear everyone's voice, you see that they have something that they want to center on, they want to focus on. I was listening to someone yesterday and they wanted to focus on jobs. I listened to someone yesterday, they wanted to focus on energy. For you all, if you all can give me that center moment that you want people to walk away with, what do you want people to be focused on as they move out into the space and they're taking notes on what to focus on in the economy, what to focus on at the conference? What do you want people to center on with your work and with your vision? I'll start with you, Ashley.
You know, I think it's just elevating our consciousness about where we let our money sit and the work that it's doing. Not all banks are created equal. We have a regulatory process that has allowed some banks to discriminate against people who we know are the key to the future of having a strong global economy. Ask yourself, are you banking in a place that reflects your values? Do you have the opportunity to move your money to a place that you know can be more impactful? So while you're sleeping, while you're doing what you normally do, that bank you know is aligned with you, and they're extending opportunities to people who you know that need it. You can't leave here and not call your conscience to say, do I know the answer to that question? So if you can answer that today, and you know that where you're banking impacts your values, and if it's aligned, then that's what I hope we leave with, that hope.
Thank you. Ladi, what do you want to center people on?
Sure. I think for me, it has to be the empowerment of those who, to a degree, are credit invisible.
Yeah.
Those who either a founder or, in our case, our customers, those who, for whatever reason, the system doesn't empower them, doesn't allow them to access the financial services that they need to better themselves and embark upon their upward mobility journey. Starting to think about how can we empower those individuals? How can we invest in organizations that empower those individuals? How can we think about solutions to the problems they solve and how they can actually be lucrative investment opportunities? And I think that the empowerment of those that are credit invisible ultimately is what Moove is focused on. And hopefully that will be my message to the conference.
Amazing. Jalak.
Well, I think being open-minded to new technology and understanding the true impact it can have. I mean, I've seen so much resistance or the negative of AI or the negatives of Bitcoin or crypto. But a lot of this technology can be used in very positive ways. And I don't see, industry is built on legacy, and we really need to, as investors, as citizens, be open to supporting. This goes along the lines of what they were saying too, supporting new ways of doing things that can eventually benefit us all.
Awesome, Matt.
I would say trust is incredibly hard to build, but easy to lose, and is the foundational component of transforming, especially consumer financial services. That's it.
Awesome, Ambassador.
Yeah, and I mean, it's easy. It's AI. I mean, since the steam engine, we haven't had anything like this. As we sit here, it is literally transforming the entire world, and it will transform every aspect of this world, every career, every government, society, et cetera. I mean, and so everything that we are investigating, looking at, whatever, we all have to think through what will be the impact of AI on this or that, because it's happening.
I want to thank you for your contribution to the conference. Thank you so much for your work, and onward with FinTech. Thank you.
Thank you.